Hello, chart watchers, and welcome to this Wednesday, January 31st Market Watchers Live Show with your hosts, Tom Bowley and Erin Swenlin. For those of you joining us for the first time today, you picked a great show, and for our regulars, welcome back. Let's take a quick look at the market action so far today. This is on the heels of a lot of selling that we saw yesterday. You can see that the Dow Jones Industrial Average started off on a great note this morning, along with the other major indices, but literally we have been seeing selling across the board since. We are still in the positive territory on the Dow, the S&P 500, and the NASDAQ, but we do see the Russell 2000 moving into negative territory, giving away the earlier gains. The 10-year Treasury yield continues to move higher, up to 2.74%. So we are seeing selling in both the bond market and the stock market since that opening bell. As far as leadership, we're seeing some strength in industrials. The aerospace index, you can see really gapped up at the open, and that is all owed to Boeing. Boeing had an absolute blowout quarter. The market has been telling us this for a while, as Boeing has been moving higher for the last couple of months, and they did follow through with a great earnings report today. But you can see after the opening gap, seems like a lot of this already built into the price of the stock. We'll talk about that more in a bit. Technology also having a strong day, gapping up, but you can see, just like the overall market, continuing to weaken. Pitney Bowes, stock that's been kind of a non-factor for a long time, is starting to show some life and actually is up a huge amount today, as you can see, leading the technology sector. Healthcare continuing to take it on the chin after yesterday's weakness. We saw a little bit of strength at the open, but once again, quickly into negative territory. And you can see that the biotechs, along with pharmas, have been leading this move to the downside. And with that, I am going to bring in the birthday girl, my co-host, Erin Swenlin. How are you doing this morning, Erin, and happy birthday? I'm not hearing you, so you might be muted.
I guess I must have been.
Oh, there we go.
Thank you. Thank you so much for all the birthday wishes. I've been getting a lot here in the chat box, and makes me feel pretty special.
Yeah, happy 39th.
Yes, exactly. I'd share, but
No, you don't need to do
anybody needs to know. So,
well, this is going to be a very special birthday celebration here on Market Watchers Live, because we have your dad, Carl Swenlin, here. Welcome to the show, Carl.
Thank you. Glad to be here.
Yeah, it's awesome. It's awesome to have you. It's been way too long, and I know all of our viewers are very interested to hear about the way you look at the market and things that you've developed over the years, and we're really looking forward to that. And we're going to have you back probably in about 10 minutes or so that you can share your information with everyone. But certainly glad to have you.
Okay.
All right, Erin, I know it's birthday, but we still got to get on with the show.
Indeed.
So why don't you go through the announcements and the agenda, and then we'll get this party started.
All right. It started this morning with an eclipse.
Okay.
All right. So as far as our agenda, weekly schedule, today, obviously, Carl is here, so that's going to be a treat. Tomorrow, we have Bruce Frazier, who's going to talk Wyckoff with us. And then I'm going to be doing a workshop on Friday on sifting scans, what to do when you get 45 or 100 results. How do you go through them to find the best candidates? So I'll go through some of my strategies with you for that. And as far as today's agenda goes, we'll, of course, start off with my dad, Carl. He's got a lot of interesting topics to talk about. Very interested in that. 10 and 10 to 1. I'm actually going to do them today with Carl. So that's going to be a treat. And the first symbol is going to be Bank of America, BAC. If you'd like to go take a look at that, take some notes before we get there. And finally, we'll finish off with momentum sleepers, give you a few ideas of some stocks that we're seeing that look like they're ready to move. So with that, I'm going to pass it back to you, Tom, for some technical news.
All right, let's take a look and see what's going on so far today in the market. Well, first, I pulled up a long-term chart on the 10-year Treasury yield. This is actually the last 3 years, not really a real long chart. But you can see that this move here above the 260, 270 area, we're now at 2.74%. This is clearing some pretty significant overhead resistance over the last 3 years. And if we take a look at a longer term, we could go back, maybe 10 years to cover the entire bull market. And you can see that we had been downtrending. But this is actually starting to make some noise on this weekly chart. And if we can get up and take out 3%, because we do have a double bottom in play, so I think this high up here around 3% could be very significant. And if you looked at a long-term 35, 40-year type chart, maybe even 45 years, go back to the beginning of the 1980s, or I guess that would be 35 years. Anyway, if you move back that far and look at the long-term downtrend line, you know, depending on how you draw your line, it probably comes in somewhere between 3 and 3.5%. So I think you've got long-term trend line resistance that we're watching, and then of course this yield resistance here at 3% or so back at the end of 2013 when we put this double top in. I think all of this is kind of a big deal in terms of maybe money rotating back away from bonds. We've seen money moving in the bond market for so many years. We just assume it's just going to continue to do that, and the market looks like it may be changing a little bit. But with this, I'm just going to leave this longer-term chart up on the screen of the 10-year Treasury yield. We did have a few economic reports out earlier today. The January ADP employment report, of course, this is a precursor to Friday's non-farm payrolls report, but the ADP employment report came in very strong, 234,000 jobs. Market was expecting 195,000. Then we had the January Chicago PMI come in better than expected, 65.7. Market expecting 64.0. And then finally, December pending home sales came out at 10 a.m., and they matched estimates at a rise of 0.5%. And of course, in less than 2 hours, we are going to be hearing from the Fed. The FOMC policy statement is due out at 2 p.m. Eastern Standard Time. And I would say, based on what we have been seeing these past 3 to 4 months with this huge rise in the 10-year Treasury yield, it certainly seems that the bond market is anticipating maybe some hawkish comments looking out into 2018 and beyond from the Fed. But we will find out all of that at about 2 o'clock this afternoon. The XLI, which is the industrial ETF, wanted to point out a couple of things, because now what we are seeing, and this is a little different than what we've seen over the past maybe 2.5 months. During this uptrend, you can see that the PPO has been continually rising, but as we have sideways consolidated here, we now are seeing the PPO roll over. So if we do break out to a new high, it is likely to come at the expense of a negative divergence, which is not always a great thing. We saw that actually. I'll come back to it in just a minute. But the XLK, I wanted to point out on this pullback, you can see that the PPO here is doing the exact same thing. And so a breakout would likely result in a negative divergence on the XLK's PPO. Now, if you look back to the highs on the XLK in November, these two highs, check out that PPO, negative divergence, and we lost the rising 20-day moving average after that negative divergence. Here, we continue to move higher, and we bounce off of the 20-day moving average. Now, if we do move to a new high, maybe later this week or next week, we could be printing some negative divergences, which could set up a little bit more weakness, I think, maybe in that second week of February. We'll have to kind of watch that. Let's go back to that XLI so you can see this negative divergence. Here you can see higher prices back in October and a lower PPO reading, and there was the ensuing weakness. We did not hold the rising 20-day like we've been doing when the momentum is accelerating to the upside. And momentum accelerating to the upside, for me, is a rising PPO. That is telling us that our short-term moving average is pulling away from that longer-term moving average. So price action is accelerating to the upside when we have a rising PPO. So those are a couple of the sector charts that you should keep an eye on. If we go to the others, the XLF, which is the financials, you can see also the PPO beginning to roll over, a little bit of a crossover there. So the next high there could also produce a negative divergence. And the final sector among the aggressive groups, the XLY, which is consumer discretionary, also with this push up, a little bit stronger than the others. We're starting to see a little bit of weakness here, but that could get eliminated with some further strength in the consumer discretionary space. So something to keep an eye on, at least as we go forward. Now, the weak group today, without a doubt, healthcare. XLV, you can see the selling the past couple of days. Yesterday, we talked about it, but Amazon, Berkshire Hathaway, and JP Morgan all came together, formed a company, a nonprofit, basically. They said there was no profit incentive in this company. Essentially, what they are doing is looking to improve healthcare for their employees They're looking to improve employee satisfaction and also at the same time lower costs. And those three giants are coming together to try to figure something out. As a result, just about every area of healthcare was getting hit yesterday, but especially the drug distributors, the managed care, and the retailers like CVS. Those types of companies were getting hit yesterday. We did see a gap up earlier today. One of the companies in that managed care space, ANTM, came out with very strong earnings this morning. That company gapped up, set new highs. I'll pull up the chart so you can see this. Earlier today, completely wiped out the selling that we saw yesterday down to the 20-day moving average. Moved up earlier today, got up to almost $268, clearly to a new high, and we have seen a big reversal here. And again, we've got this PPO rolling over and crossing over with a failed breakout attempt. So some of these healthcare stocks and some of the other groups that we talked about earlier, some of the other sectors, could be running into some resistance ahead, especially if prices move higher and we don't see the PPOs begin to strengthen again. One company that came out with absolutely stunning results today was Boeing. Boeing came in with revenues 25.37 billion. The market was only expecting 24.83, but the real beat was on the bottom line, $4.80. The market was looking for $2.91. So when you look at a stock like this, and this is why, in my opinion, technical analysis is so much better than fundamental analysis. And this is coming from a CPA. I was in public accounting for 20 years, but the charts tell you what is likely to happen before it happens. So we saw Boeing down at about $270 to open December. This stock ran up to $350. That's a huge move for a Dow component, $80 or roughly about 30% in 45 days. And then was simply sideways consolidating, awaiting this blowout report. So I think Boeing, I want to watch this candle because, again, you've got a PPO that's lower. And if we fail to hold this breakout, it may be that this run-up has already built all these solid fundamentals into the price in the chart, and we may see a little bit more extended pullback. But make no mistake about it, Boeing is a very strong company, very strong fundamentals, very strong technicals, but it may just need a rest, and it might need maybe a little bit of an extended one. But let's see how it performs the rest of the day. A finish back up near its high, I think, would be very bullish. Otherwise, if we continue to drift lower throughout the day, then today's open may put in a short-term top on Boeing. A couple of other companies that reported. CHKP, this is in the software space. Checkpoint Software came in with a beat. Top line and bottom line. Actually, I think their top line may have come in just a little shy. But bottom line, they had a beat, $1.58 versus $1.51. And you can see the charts really not really expecting much based on the action after the gap down back in November. We've been going sideways. And the other thing is, and I like to pull up these weekly charts, check out the last time we pushed to a high on CHKP. Look at the higher price. Look at this lower PPO, negative divergence, and keep in mind, the PPO only takes into account price action, not volume. So when I get a negative divergence like this and I'm getting a breakout, look at the volume that was coming in on this breakout. Volume was actually pretty far below average if you look across here. So that combination normally is a big warning sign for me. A negative divergence on a weekly chart and a breakout with less than average volume, that's set up, in my opinion, a reset, what I call reset, which is the PPO dropping back to the zero line and a pullback. Instead of testing and holding rising 20-week EMA support, we saw a quick move back down to the 50, and now we're trying to sideways consolidate. One piece of good news so far is that today's earlier low actually cleared these prior lows, and we have rebounded back up above. So far, holding on to a fairly key area of support on Checkpoint. You can see that here on the daily chart, going below these lows and holding on, coming back up, potentially printing a reversing candle today. Eli Lilly, LLY, another one of the pharmas that have come out with good earnings and not really getting a great reaction. So that's a little bit surprising. But on this low, it looked like it was potentially going to take out these prior lows. And so far, we are holding. I want to see how Lilly closes today. But so far, this is a false breakdown, and that would be much more bullish for it to close where it's at or a little bit higher. finally, Sirius Satellite, SIRI, huge move prior to earnings. They did beat slightly on their top line, and they matched estimates on their bottom line. And this is another one where if you pull up a weekly chart, you can see that with the highs that we had back in August and September, check out the higher price, look at the lower PPO, and really some of these, the volume, especially this last high right over here, there was almost no volume in the chart. So I think the stock just kind of ran out of short-term buyers, and the stock sideways consolidated, went down a bit, hit that 50-week moving average. You can see the PPO basically resetting at 0, and now we are moving higher with a breakout on increasing volume. So I think Siri, actually, if we look at the daily chart, this pullback may actually present some opportunities. You've got a nice breakout here at about the 575, 580 area, and today's low was down at 585. So perhaps a little bit more downside, but that price support level along with the rising 20-day moving average looks pretty interesting to me. And with that, I'm not going to delay any longer. This is a very special guest that we have today. Carl Swenlin is a veteran technical analyst who has been actively engaged in the market since 1981. Carl was founder and president of DecisionPoint.com, one of the premier market timing and technical analysis websites. I know Erin has been on here multiple times talking about some of their timing awards that they have received. So it is a real pleasure, Carl, to have you on the show finally. And this, I hope, is not the only time that we're able to get you on here.
Thank you. Should I be taking the screen now?
Yeah, you can go ahead and grab the screen and show folks what you have for us today.
Okie doke.
Now, where while you're pulling up, where are you at? Are you close to Erin out in California?
Yeah, she's just down the road about 40 minutes or 3 hours, depending on the day, with the traffic. But yeah, I'm in Redlands, east of her, about 40 minutes.
Okay, I didn't realize they had traffic in California.
Yeah.
We actually call my stretch of freeway Corona-geddon because it's just the traffic is so bad through our city.
Yeah, is that 5? Is that Interstate 5 out in that area?
Well, 5 is in the area, but not near us. We have a state route 91, and it's just it goes from LA through my city and Orange County to the east, where Carl is, and it's the only way really through that area, and it's just so impacted. No fun. No, but working from home makes it easy. I don't have to go far, and my husband works less than a mile from the house, so doesn't bother us too much.
Well, I'm not going to ask Carl to negotiate traffic, just the S&P 500. What do you have here, Carl?
Okay, well, I wanted to start out with mention that Decision Point won Timer of the Year, Timer Digest this year, along with 10 other timers. I've never seen it happen before. I've never seen a tie, to tell you the truth. But the reason is that the market was so benevolent this year. Mm-hmm. When I developed the timing model, the intermediate term trend model, when I developed that, I was trying to get something that would just respond mainly to 20 and 50-day crossovers. And normally, in a normal year, we would probably get a pullback that would take us out, put us into neutral, and then as it continued back up, we end up being on another buy. Well, you get slippage in that situation. Well, this year, as you can see, the 20 never crossed the 50, so we stayed on a buy signal all year. And anybody that had a timing model that kept them involved as long as the trend was positive, was going to be up there. And as I said, there were 11 of us at the top this year. I just wanted to say here we had a little over 3% pullback here and a little under 3% here. That was bad as it got, and well, it was quite a year.
Yeah. Now, is the 22.9% that you're showing, is that the return for the year?
Yeah, that was actually, I should say it was probably less than that, because that's where it closed. But that was the gain at the highest, and the lowest to the highest was 22.9.
Mm-hmm. I mean, you're following the market. Have you, with the run up that we just had in January, have you seen the market this extended before?
No. If you look at the weekly chart, you look at any of the charts, the market is just on vertical. When it gets that way, something has to give. I mean, it may continue down for a while, or we're just, how little the market's given back on this straight up move. But I mean, that is my concern when we look at a S&P 500 chart, say the weekly. We'll see that it swoops up in a parabolic move, and when it gets that close to vertical, it just can't do it for long. So, the chances are really great that it's going to correct here somewhat. I'm not saying a classic parabolic collapse is not what we're going to see, because this is not a big enough parabolic. But we could have a nice 10% pullback anyway to get things a little more less vertical. Okay, the reason I have this chart up, there's two things on it I wanted to show. One of the things is we use the premium and discount for Sprott Physical Gold Trust, which is a closed-end fund that owns physical gold. Just to review, most mutual funds are open-end, so we don't know what their value is going to be at the end of the day, or until the end of the day. We have no way of tracking them intraday, because you take their assets and add them up at the end of the day, and then that's what you have, the net asset value. With a closed-end fund, they can't take in more money. They can, but normally no, they don't. So the fund trades on the market like a stock. So you can get it selling. If they're bidding it up, you can get it selling at a premium to the net asset value. And same on the downside. If people are getting bearish, then they're going to start selling it at a discount. And to me, that's a pretty good sentiment indicator, because people are willing to sell it at less than it's worth. That means they're anxious to get out. What I've been looking for, gold has been just so stubborn that you can see the 20 and the 50 crossing over a number of times, and it's basically moving sideways. So what I'm looking for is to see real buying interest come in, and to see the premium, the green bars, getting up there and steady. But you see, we had just a little breakout with the green in March and April, and then back to what we've got, selling at a discount. The other thing I wanted to show on this chart is how the PMO is good at picking tops and bottoms. I mean, actionable signals here when you get it's fairly extended in either side of the zero line. And this is because the price is essentially moving to the side. It's going slightly up, but it's moving sideways. And when the price is moving sideways, the PMO tops and bottoms tend to be very good short-term signals if you're trading in that time frame. Now, as the price starts ramping up, and having a nice upward rising trend, I apply my interpretation. I apply what I call trend bias, and if in an uptrend, you kind of ignore the tops because they're PMO tops, because they're not likely to give you a really good trading opportunity. And on the other hand, the PMO bottoms will be really more reliable on a rising trend. And then it works just the opposite on a downtrend. Okay, new subject. I wanted to discuss the difference between your cap-weighted averages and equal-weighted averages. Showing the spider here on the top panel, and then RSP, which is a Guggenheim EFT equal-weighted S&P index. On an equal-weighted index, they weight everything equally, and then every quarter they rebalance because it'll get out of balance, obviously. And the advantage to the equal weighted is on advances. It is probably going to be outperform the weighted index, because all those smaller cap stocks, you get a lot more vigorous trading on them, and a lot of nice action. For an example, right here we see 2010 an advance of 124% compared to only 90% for the SPY. And before I forget it, also on the downside, the equal weighted tends to outperform to the downside. So we got a 57% down there and 61% down here, and it's really can get much worse than that. So you do have to watch and see how they're performing and the kind of market that you got. Here's another one, 167 versus 118. And the big one is for the entire secular bull market in which we're still in, unequal weighted was over 500%, and cap weighted only just a little over 400%. So almost 25% better performance in this long bull market. Excuse me. Notice now that on this last rise from the correction we had in 2016, 62% on the cap weighted, 62% on the equal weighted. What this means is that the focus is narrowing to the large cap stocks. There's less activity in the smaller cap. It's not necessarily a bad thing yet, but it's something that just shows us that the money is not nearly as excited as it was coming out of here. Okay. I wanted to show everybody this 30-year Treasury bond yield chart. If you take going from that the top there, 1980, that pretty much is the beginning of my career as a technical analyst. That's when I started working. But you can see that the bonds, 30-year bond has been in a bull market that's lasted around 35 years. Of course, the interest rate has been in a bear market, but what we're seeing now is what Tom pointed it out earlier, a double bottom, which is, I've drawn a line there. So we really have a wedge formation, and as a falling wedge. And as people know that follow my commentary, is I think there's a very reliable formation. They generally, a lot of high reliability will resolve upward. And I think that is probably the case here. We've got the double bottom, but we still don't really have we can't say we're in a bull market yet until we get above this trend line. So probably be waiting for that for a while.
Yeah, and I think too, Carl, looking at that chart, you've got a double top there around that 3% level going back to 2015 and 2017. And so breaking above that trend line, also about the same time breaking above key resistance. I mean, that would at least start to point everyone in the direction of at least the possibility that this downtrend is beginning to turn higher.
Right. I'm, from a purely fundamental point of view, I don't see how we can avoid it.
It seems to me too. I mean, if you look at the PMO as it's been trending lower as far as the yields go, you can see that you do have a positive divergence. The PMO was rising and continued to rise even as prices were as the yield was starting to fall. So I would see that as a positive as well.
Right. And I meant to comment that, we expect to see this trend line broken, but that doesn't necessarily mean we're going to go into a nice positive rising trend from there, because it could dribble along sideways for years. Let's see. Okay. Back around the late 1990s, S&P came out they divided the S&P 500 into 9 sectors: industrials, materials, healthcare, energy, etc. And just a couple of years ago, they spun real estate sector out of the financial sector, and I will discuss reason for what I think is a reason for that. But looking at this sector, basically, you see the early trading, but it's settled down now, and I think it's good for trading at this point. Still not really a lot of volume, but not too bad. Wanted to show what happens. Okay, this is the financial sector, and you see it since the low in 2016, it's advanced almost 100%, whereas the real estate has only gone 34%. And there's quite a bit of difference in the performance on both of these. Right now, real estate is one of 2 of the sectors, the other being utilities, that is starting to look pretty negative. I got to move my dock. Okay, now I'm comparing, since we have such a short amount of data on XLRE, just thought I'd point out that IYR is one that pretty much mimics the XLRE pretty well. I mean, here's the relative strength line. I know there's some variation, but it's if you're looking for deep data on that sector and want to take the XLRE, well, that would give you an EFT to trade and to be able to look at the deep data. Notice here on IWire we have the over 75% decline during the real estate crisis, and now since then it's advanced 453%. Pretty good. But I do think we're running into problems here. Fundamentally, we know that interest rates are edging up, and that is just going to impact negatively on the real estate market. Back when before the crisis, back in the early 2000s, I totally didn't get it. To me, it was like, how much does a house cost? And I couldn't believe the way these prices were going up. But of course, the real thing is, how much does it cost a month? And that's what really did the trick. And that kept bringing interest rates down, and people were able to squeeze higher prices for the total price of the house. So we're going to run into the same thing now. It's going to start squeezing at how much per month. That's going to start going up, and so the prices, people are going to have to look at lower priced properties. So I think we're probably at the beginning of that, but of course that's I'd have to get my crystal ball out, check that for sure. Again, we have the cap weighted index, and then Guggenheim has come out with an equal weighted index for the real estate sector. But you notice here the relative strength line is pretty flat, which means these two are running together pretty well. I think one of the reasons for that could be that as you start spinning off or splitting out stock, this has way fewer stocks than when it was combined with the financial sector. So it's going to get less and less effect by having a cap weighted average. And I think that's good for me.
So at this point, I mean, where are you looking at as far as gold and the dollar? I know we've been discussing it back and forth, and are you thinking the dollar's ready for a rebound? I think we talked about that yesterday on the show. I'm just curious your thoughts.
Yeah, I think, because it looks like gold, and if I can go back to that chart, we've got a top on the PMO, so that means that we're probably going to take a trip down this way again, and maybe not this full distance, but I think the dollar will rebound some, and the gold will pull back some. Mm-hmm. I'm still waiting for the gold to get, just get where the buyers are pouring in. When you get those green bars on the bottom, you start getting those heavy duty very consistently, and that'll be a good signal that we're finally catching on.
Mm-hmm.
Yeah, one thing, Carl, that's kind of interesting to me is, I don't know if you listen to the show very often, but Erin and I differ a little bit in our styles and strategies. I'm a very short-term oriented trader, so I'm always looking for areas of the market that are outperforming the benchmark S&P 500. And the thing that kind of is interesting to me when I look at the dollar and gold is that the longer, this run that we've had to the downside on the dollar, which really dates back, from the top back at the end of 2016. I mean, we were going straight down throughout much of 2017 and, of course, to start 2018. And yet the thing that I find very interesting is during that same period, the relationship between gold and the S&P 500 also has moved lower. It's like, the gold should be getting some serious tailwinds from a dollar that's declined as much as it has. And yet, despite the huge drop in the dollar, if you pull up something like the GLD:SPY, that ratio has continued to decline. So you have to wonder what it's going to take to get gold breaking out on a relative basis to the S&P if the dollar falling as much as it hasn't really done it. You know what I mean?
Yeah, I do. Yeah. Let me see the weekly on the dollar here. You see that this is what we're looking at as a as a probable target. I'm not sure you draw a line across these tops or not, but for me, this will be the downside target for the dollar.
Mm-hmm.
Long way down.
Yep.
But at the same time, I mean, is that going to really give us what we need out of gold too? Are we going to get that breakout if we can see the dollar fall that low?
Good question.
I know, right?
I think that breakout in gold, but I just don't think I guess another question would be whether or not gold actually outperforms the S&P 500. I mean, if it's not outperforming the S&P 500, then for me, why would I want to invest in it, I guess?
Well, to me, it's that area where when it can go. Look how it went up there in that parabolic to the highs. I just feel like it's just another sector that you could be involved in, and I guess I'm one of these people that I'm not a gold bug per se, but I think it's good to have some in your portfolio.
Mm-hmm. Well, it's definitely a nice hedge. I mean, that's I think what a lot of folks use it for. I mean, there are a lot of folks out there that do like to trade gold. And a breakout above that 1400 level that you're showing there, I think, you'd take out tops for the last 4 or 5 years. I think that would be very significant. Technically.
Yeah, and possibly that falling dollar will help contribute to pushing it above that.
Mm-hmm.
Yeah, people are just not excited about gold right now, and we're just waiting for that to change again. That's all. What we had on gold, we had this huge parabolic up move, and then broke the parabolic, and a collapsing parabolic. One of those targets is you think it can go all the way back down to the basing pattern, which does happen. But a 50% pullback, which is about what we got here, is also realistic. And it kind of straightens things out. So it gets the excess out of the market. Mm-hmm. And it's just a matter of when people start getting excited about it again. I realize I'm breaking protocol with my charts. I'm not taking up the whole thing, but I didn't realize I was going to be going to these other areas.
Oh, don't worry about that. I think people could see enough of it to figure out what we're talking about. So, oh gosh, let's see. You honestly, you must be very good at your explaining things, because the chat room has been very quiet, and, and there aren't very many questions. So, anyway, I think that's interesting. So somebody did mention that, a falling dollar could drive money into international markets, not necessarily into gold. Do you see it possibly helping a falling dollar?
I'm sorry, I didn't understand.
So, yeah, the question was, will a falling dollar drive money into international markets?
I don't know. That's not one of that'd be a question for John Murphy, I think.
Yeah, exactly.
Yeah, actually, John did write about that recently, and he did talk about that exact point with the dollar falling, that it makes investments overseas potentially much stronger.
Mm-hmm. Absolutely. Come on, guys. So there aren't any, let's see. Yeah, I'm not seeing any questions at this point. I'm trying to think of some of the common things that I get asked about the PMO and such. I'm in the process actually of writing an article because I keep being asked what's the difference between the MACD, PPO, and PMO. And while they travel similarly, and I know you'll agree, they're based on a different formula. So it's actually different in that regard.
The PPO and the PMO are just different calculations, pretty much get the same result.
Mm-hmm.
The MACD, those two were ratio calculations. So you get a indicator that remains constant over many years in terms of its range. MACD is not a ratio calculation. So the higher the price gets, the higher the MACD is. Now, if you put them both together on a one-year chart, you probably won't notice much difference. But if you wanted to get a sense of, well, how overbought is this thing now? And you can look back over, say, 15 years and you say, oh, the range for the PMO runs from like +2 to -2. Whereas the MACD will start, it'll, there's no way you can make a comparison to say, oh, it's as overbought now as it was back 10 years ago or 5 years ago or that kind of thing.
Mm-hmm.
How did you come up? I know you came up with the PMO and you've been following it for years. How did you come up with the parameters? We've got the 12 and 26 on the MACD and PPO. That's kind of the standard. And I know the PMO uses different time frames. How did you settle on that time frame?
I guess I just played with it somewhat. I'd have to go back and look it up on the Stock Charts website on that. But it starts out with a one-day rate of change, and I forget that you do a moving average of that, and then you do another moving average of that result. So it's kind of a tortured way to go there, but it's turned out to be, I think, a pretty good indicator. But that I've seen a number of indicators that look very similar because they're ratio calculations, and I've noticed that you can twist things around, try to come up with a new wave or a new indicator, but after a while, you just only so many ways you can squeeze the numbers, and you start getting results that may be sometimes different, but mainly that you're looking at the same kinds of longer term movements and ranges. And I have kind of throttled back my own usage. I use the PMO and I use OBV. That's pretty much it.
I wonder why mine charts look so much like yours, because I use those two indicators all the time as well.
If Erin can't make it for a show, I know who to call.
As if. It's how I would say that from California, as if.
Do you use any other indicators like to call a market top? I mean, obviously your PMO, it takes a little bit of weakness for your PMO to start to roll over, at least sideways consolidation or something, as it does any momentum indicator or momentum oscillator. But are there other things, anything in sentiment, anything else that you look at in the market to try to call a top? When you're looking at the market today, is there anything that you would be looking at?
The thing right now is we've got a market that's moving straight up, and I just don't see. There's not really any way to call the top. Let me look it up. Let me show you on the weekly chart here.
Yeah, you'll have to take the screen. I stole it from you.
Oh, did you?
Yeah, go right ahead. I had what I was trying to get some of the charts we were talking about.
Okay, I don't know how to take it back.
Oh, just new share.
No,
No.
I don't see any.
Well, which chart would you like? Because you know I have pretty much all the same ones you do.
Just show me a weekly chart of the SPY or SP 500.
There you go. There's the weekly. Can you see it?
No, I'm still looking at mine.
I
don't know. I absolutely did not push through.
Well, I'll tell you what. Look at yours on your screen, and then I will point to the stuff that's the one on my screen that everybody's seeing.
Okay, I'm looking at it from about 2013, and the cyclical bull market started early 2016, and notice at the end, the last 6 months or so, it's just started swooping up, it jumped out of the trend channel, and this kind of movement is, well, it's not sustainable, and so something's got to give. And when I see that, you can't really predict when the top is going to come in one of these parabolic moves, but you just should be expecting it and be ready to move rather quickly. Because if, like our trend model, when you have this steep a movement, well, the moving averages get so far apart, it takes forever to get price to come down through them, and then for the actual crossover to come out. And it's just one of those things you have to decide how to get out earlier. If you don't want to wait for the crossover, you have to have maybe trailing stops or that kind of thing. But no, I don't have any.
There's no silver bullet, right?
Any way of, but I know this is not. You can't go on like this, so it's going to have to correct some.
Mm-hmm.
Yeah.
I mean, and it doesn't have to go way back, but I'm thinking back to the, like the July low would be really good, but I don't think it'll go that far. But it needs to get to where you can draw a trend line that is not, it's not an upward curve, that it's just a straight trend line, and it's kind of reasonable, but it's unreasonable to see prices going up.
Yeah, the early vertical. Yeah.
Well, we've got probably, I know we've got 10 stocks here for the 10 and 10, so we're going to go ahead and swing into that. But what I would suggest, and I'm going to give Erin these symbols, and she can pull up the chart on her screen and annotate. And while she's doing that, if you don't mind, Carl, maybe you can look at it on your chart and just add anything maybe to what Erin has to say on each of these charts. If that's
okay.
Yeah. But before we do that, I do want to talk to everybody about ChartCon, because that's coming up, and we're very, very excited about it. It's going to be very similar to last time in 2016, where you can just join us live, similar to what we're doing here, only of course it's a bigger production value there with all of the authors that are going to be there and featured. But what I wanted to discuss real quick with you is the VIP packages. And I know everybody's like, oh, I don't know about that, but it's going to be so fun. And I can tell you I know one of our VIPs is in the chat room right now. And I'm sure he will tell you that it is an absolutely unbelievable experience to be one of a handful of people there, basically sitting around drinking wine and talking to all of us, just hanging out. And it's great for us because, at least for me, I have somebody other than my dad that I can talk to about the market. And I would very much enjoy talking about the market to you during our ChartCon. And we're also, of course, I'm very excited, is after ChartCon, we're going on an Alaskan cruise. And you can also do that as a VIP if you want to join us on that cruise with your partner, whoever you want to take, and come join us on the cruise, because that's going to be a lot of fun as well. And we have all kinds of events, special things that you can do with some one-on-one time with Chip Anderson, for example. So might want to check that out. Of course, I just assume all of you that are viewing the show will be watching us and getting it and seeing us live online. So I don't feel like I have to go into that too much, but I do want to let you all know that we do have that VIP package, and I would love to meet any and all viewers that want to come. So
yeah, I'd like to add that we're going to have one whale of a time.
Yes.
little pun there.
All right. Okay. So with that, I guess I will get over to the 10 and 10. So I have the first one up. I haven't annotated it yet. And Dad, what I suggest you do, I don't know if you've got that green button pressed.
Yeah, I'm back.
Oh, okay. So you can see.
Yes.
Perfect. All right. So basically 10 and 10 is we're going to show you how easy it is to annotate a chart quickly and save it to a chart list. So I will go through the annotations and give you sort of my thoughts about what I'm seeing, as will Carl. So the first thing I always do is look for my support and resistance. And I think you could make a case for putting it all over the place. But at this point, yeah.
I'm not seeing your chart. I don't know if you've switched over.
Yeah, well, that would make a difference. So let's go to it. There it is.
Yep, there you go.
Okay, so see, I could get crazy here and draw all kinds of support and resistance line, but what I really want to pay attention to, obviously, is what's going on in this thumbnail. We've now hit that top. We're pulling back, getting a little bit of a pause here, and I see this area right here. Bring it over, 3180. That's where I'd be looking in the short term for support, possibly a stop underneath that, but this would give me pause seeing that topping PMO. I think there is one thing that could be said, even though it is an overbought PMO, is that we do have bullish confirmation on this particular rally. So to me, I'd be looking for a pause. I don't know what you think.
Yeah, I don't see any problem there. One of those things that PMO tops in a rising trend, you just maybe you just need to set your trailing stops,
right,
rather than act on the crossovers or tops on the PMO.
Right, and that's what I've discussed is my trading style. I'm always looking for the PMO to be turning up in oversold or just above the zero line kind of territory. But once I'm in, I don't pay close. I mean, I pay attention to when the PMO is starting to top like it is right now. And that's when, like you're saying, I reevaluate my stops. And I don't necessarily just pull out because I got a negative crossover, especially
right.
Intermediate term trader.
All right.
There's nothing remarkable about the OBV on this. Just, it's one of those things. I have it on all my charts, but it's kind of like watching grass grow, and you have to wait for sometimes a long time before you see something that really stands out. But maybe we'll see something.
All righty, here we go.
That one.
I want to do this and make it a little bigger. Here we go. All right, so the next one I happen to know because Tom filled me in is going to be Chevron. So I went ahead and put that in since I know we were running a little on the late side here. So I think it's pretty clear where your support is right now, and it looks like we're ready to at least test that. I wouldn't be too excited about this right now. I think I would be looking for, look at the PMO is just dropping like a rock. Of course it is when we see this sort of a drop, but I would be, certainly I wouldn't want to be holding this at this point. I would be looking, if I want to go in intermediate term and look for a turn back up, I mean, you could stay in, but if you got we've already broken through that 50-day EMA, so I'm not liking this. And I don't know if I'd be bottom feeding on this just yet.
No.
Yeah. All righty, so I'll put that one in. And we'll make this number 2. All right, next up. APA, I think is what you had for me, Tom.
Yes, okay.
Oh my gosh, all of these you guys are picking. Look at these PMOs. They just are ugly. So it's not anything I can definitely tell you. Like I said, my trading philosophy, more than likely every one of these charts I'm going to look at would probably not necessarily be a purchase for me, just because, again, I'm looking for a really specific situation. And, you know, when I see a PMO like this, obviously I'm not going to be getting in. I think that you have a little hope in that when you look in the thumbnail over here, that price has managed to hold the 50-day EMA as some support. But, you know, I don't see that as a really strong support level. I mean, I guess you could make a case for it here with these bottoms and tops just recently. But again, when I see that, I certainly wouldn't be getting in. And I wouldn't be ready to bottom feed on this one either. I'm not sure how helpful that was there. Let's see. So at this point, I know I've just been drawing support and resistance lines, but, you know, honestly, that's where, you know, that's what you want to pay attention to. I mean, I think Greg Morris, Dad, who said that the only trend lines that matter are the support and resistance. You know, those are the only ones you should be paying attention to necessarily. He's not a big proponent of rising bottoms and declining tops trend line.
Yeah, that was an interesting thought, and I have been considering it since I heard it. It's yeah,
absolutely.
I can see it isn't logic.
I mean, I know I've been paying more attention to it since he wrote that article. It was a while back, but I'd suggest you go ahead and take a look at Greg Morris's blog. It's free, and there's some great information in there. Well, it looks like we found some nice support on the gap even. I think that's a good sign here. You know, the PMO is looking all right. It did turn up. We got the buy signal. It's flattened down and fallen. But honestly, with this kind of a price deterioration, to see the PMO only drop just a little bit there, I think this one actually has some potential for a bounce off of this area of support. So I have to say, of all the ones that we've looked at so far, this one I think has some potentiality.
You know, look at the PMO. I'm sorry, the on balance volume, and you notice the last top on the OBV. It's higher than the one in December.
Let me get rid
So
of
what you have here, you've got two equal price tops and then a higher OBV top. That is a reverse divergence. That's I did call him that for many years, and then I read an article by Martin Pring, and that's what he identified them years ago. And it's really what it says to me. There's a lot of volume going into the stock, but the stock is not getting to where it needs to be. The volume that's going in is not enough to push it, say, above that November top. See, so you've got a double top instead of a higher top to match the OBV.
There we go. Let me see. Make that blue. All right. So there's that double top as well, right?
There's a double top, and then the reverse divergence on the.
Yes. So I mean, I think this one's got some more short-term potential than what we've seen on the others, and you know that divergence there seems to have played out really a little bit too in that price decline somewhat. Let's see here. That was number 4, I think. All righty, next one, INTC, and then after that, Tom, you're gonna have to start feeding them to me.
I got you.
Okay, let's see here. All right, so I like to make mine a little bit more transparent. So we're right there on that support line, and it looks like a pretty strong area of support at this point. I like the PMO. It's rising. It's not overbought. Seeing a little bit of deceleration, but not a surprise. You know, we've had a couple down days here. So I like the fact you got the breakout on a gap up. You're holding that gap support there somewhat, and you know, we've already pulled back now. So this is the kind of opportunity I would normally look for. You know, you got the breakout, and now you've gotten the pullback toward that breakout point. So there's some potential there to get that bounce off of that support area of support. I suppose you could want, if you want to worry though, because some people always want to worry. Yes, you could say there's an island here. So we could have gotten a false breakout and it's an island and we're going to come back down here and close that gap. So.
And you've got a negative divergence on the OBV.
Yes, indeed. Right there. Let me draw it because that's the whole point of this exercise. From here to here is what you're looking at?
Yep.
Mm-hmm. And that would be here. Yeah, so we've been basically rising here. All right. So there we go. That's number 5. Not too bad. I know we started late. I'm feeling pretty good.
Number 6 is ABX.
Alrighty. Into annotate mode. Here we go. All right. Immediately, support and resistance. I honestly, the first characteristic that sort of comes to mind right here for me, and it's kind of a messy one, but I can almost see a reverse head and shoulders here. I mean, I think you could make a case for sort of a complex one, but what really is a bit concerning for me is this possible triple top right here. And you know,
you have a reverse divergence on the OBV.
Yep.
So that's like, nope.
Nope, this way.
Right.
Yes, there we are. Yeah, and see from here, from there to there.
There's more volume being pumped into it, but it's not pushing it any higher.
Right. So those are some concerns I would have. And, you know, for us, our trend model, when you look at EMAs, this braided, they're completely not helpful. And I would be paying close attention more so to the 50 being so far below the 200-day EMA. I mean, this has been in a bear market configuration for a while. I think there's some hope there. We're getting close to some support. But if that's a triple top and we get that breakdown, you would expect a drop about the size of that pattern. That would certainly have you down here testing these lows from December. All righty, that was number 6. Okay. And next up
is Toll Brothers, TOL.
I'm actually starting to remember some of these symbols, Tom. Yeah. I'm getting more proficient as a short-term timer. Okay, so of course, first thing, support resistance. I think that's a pretty significant area of support, and we're now bouncing off of it. I like that. But here are the things I don't like. I don't like the PMO not decelerating yet at all, and it's still heading down. It's getting ready to make a lower low, which would be a negative divergence with these lows, if this turns out to be one. I can see some serious problems here. Although, you know, really, when you look at this OBV, I guess it looks a lot more bad in the thumbnail, more of a straight down. But, you know, it's more, you've got a decline here. So you would expect to see the...
Well, it's confirming it. Yeah, but it doesn't confirm the, you've got the early January top and then late January top, you know, higher high. And then yet the OBV itself has got a lower top.
Yep. Yeah,
So.
Move that there. Yes. We're always looking for the divergences. And one thing, you know, as far as the difference between the PMO and the PPO is that you're going to see, you might get different divergences. You might get a PMO that has a lower top than you'll get from the PPO. It might have a higher top. So you're not going to see the same divergences, positive or negative, that you will on, actually, this is 7, right?
Yeah, that's 7.
There we go. See, I can see how hard this can be. All right, next one.
Number 8 is NTNX. Nancy Tom, Nancy X-ray.
All right. There we go. All right, so this one doesn't have a scooter, so I'm not going to, I'm just going to cover that up for now. Wow. Okay, first thing, let's get to annotate. Some support and resistance. Are you seeing anything right away, Carl, Dad?
Negative divergence on the PMO and the OBV.
Yep. So all of those, you know, I could see a case for, you know, you had the divergence between these two tops and we got the decline off of that. But you know what? The PMO is not improving. We did get a bounce, so we might see some deceleration, but that's a lot of volume falling out of this, and we're getting ready for that 50-day negative crossover. So, you know, this is an area that could hold as some support, but I honestly would be looking even further toward that 200-day EMA at this point. All righty. Number 8. Okay, 2 more, right?
Yep. Next is HFC. HFC.
All right. Excellent. Looks like people are looking for these to bottom feed a little bit here. All of these on declines, looking for those bounces off of support like we're seeing here. Again, for me personally, I would it wouldn't be a candidate for me until I saw that PMO turn up. You know, there's already a little bit of problem here when you're looking at that OBV, the tops falling like this. I would say that's a bearish confirmation given the price tops. So we're not seeing any. I'm not seeing anything here that's telling me that we're looking at the bottom here. And you know, I do trust my PMO, our PMO. And I don't like the way it looks right now. And you can even see there's just a ton of margin between the PMO and its PMO line. So, you know, it is support. It has hit some support and it is bouncing up, but it's got to get above that 50-day EMA. It also has to struggle to get above that 20-day. It's not something I'd be all that interested in. Did you have a comment?
No, I have no comment on that one.
Okay. Go. And the last one is
an ETF, and the question is, would you continue to hold this one long term? It's the XPH.
XPH. Okay. So I'm guessing this person has it, and now they're thinking about holding it long term. Okay, I'm going to move to since we're talking more in the long term, I'm going to look at the weekly chart. The PMO looks pretty healthy on the weekly chart, I have to say. Let's go and annotate some of the support and resistance levels. And I do thicken mine up because, you know, I'm looking for just areas that sort of match up as far as overhead resistance. And I would say we're looking at, it's just hit it and it is pulling back from that area. We didn't get the breakout. But I think that when you look at these indicators, the PMO is rising. It's rising with price. I like that. OBV is rising along with price. I don't like that we didn't make it through this time on that overhead resistance. We do see the 20 is crossed above the 50. You know, at this point, I would say we're talking about a longer term hold. I would stick it out because the picture in the weekly chart, I think, looks bullish enough that I wouldn't be getting overly concerned at this point. And if we get that breakout, which I think is certainly possible, then the upside potential is looking pretty good there.
One other comment maybe on that one, Erin. I know that the pharmas, the underlying index, the DJUSPR, just made a breakout and has cleared those 2015 highs and done it quite a while ago. So I'm not quite sure what the components are of the XPH, but just the fact that it's performed so poorly relative to the underlying index would maybe concern me a little bit.
Okay, so what was that? Dow Jones, US?
PR.
There we are. Yeah, and this is the weekly chart for this one too. And I'm gonna just I know this would be chart 11, but yeah, I mean, beautiful breakout. You know, we're dropping back down, which honestly I look at as a good thing because you get the breakout. It's always a good thing, I think, to see it pull back toward that breakout area. It's holding the 20-day EMA. I'm not thrilled with the fact that the PMO is turned down, but it's really on today's trading bar. So it wouldn't overly concern me at this point. But yeah, we're seeing that breakout already on this particular, on the industry group index. Yep. Interesting. All right. You guys get a bonus chart. You're getting 11. Oh. This one goes up to 11. All right. 10 and 10, here are the symbols we covered. And I they're already there. You saw me annotating and adding them right into that Market Watchers live chart list. So they are there for you to go enjoy and copy and whatever you wish. So you'll find those. The link is at the top of the Market Watchers live blog. So with that, I know we're going to talk about, let's see, first I have to do the market update. So I'm going to go ahead and get into that right now. Alrighty. And I'm going to go right into that candle glance. Can you see my screen? I just want to make sure.
Yes.
Yes.
Okay, good. Okay. Oh, I went too far. So if you go here, this is really such a great tool. And for our market update, this is where we always go. I'm going to change the Wilshire to the TSX because I know our Canadian friends would like to see what's going on in their markets. And as you can see, I mean, we started up, we had that nice rally pop in the morning, a nice gap up. We're starting to pull back from those highs, though, and lost about half the gains. But it appears we're trying to bounce and get back up to start, you know, on the right direction and trying to get back up toward those intraday highs. Russell 2000 is lower. It also had a nice spike jump at the open, but has since really pulled back, and now it's trying to get into the positive territory, as well as the TSX. Very similar action, although we saw with the TSX a steady decline after the open, but it is erased most of those losses. Treasury yields are up slightly, reading at 27.31. We can see UP is gapped down, but has made quite a return and is about ready to cross back up into positive territory. Commodities are mostly unchanged. A little bit of a volatile day here for USO, but currently is up at 1292. Gold gapped up, has been pulling back for GLD, currently reading 127.13. The VIX has started to fall somewhat today. Be interesting if the action of this pullback here on the major indexes will change that somewhat before the end of the day. But we're still getting readings just under 14. So for weeks, we were looking at readings at around 10 or a little bit lower in the 9s. So seeing these elevated VIX numbers is very interesting. And I did write an article about expecting short rally pops when you get that extended on the VIX. And you can find that in the Decision Point blog. Very quickly, look at our market summary and see where our industry groups and spiders are. Currently, consumer discretionary, well, no, let me fix that. Currently, technology and industrials, as well as utilities, are all up just a little bit at over 0.6%. Healthcare is the big laggard today, down over 1% for XLV. We can see as far as U.S. industry, REITs, airlines, broker-dealers leading on the top there. And we're seeing drugs, oil services, and biotechs on the bottom as the laggards. With drugs, we were just talking about pharmaceuticals falling the most right now, pulling back after that breakout. International ETFs, China, which I know was actually a laggard yesterday, is now leading up over 1% for FXI. And we can see about a third of the ETFs are still, the international ETFs are in the negative. Singapore and Japan are the laggards right now, with Singapore ETF EWS down over 0.5%. And I'm going to take us very quickly to our member homepage and look at the scooter movers currently for our large caps. And you can see as far as the big mover today, if you just hover over the symbol, Pitney Bowes having a great day. You can see that big hollow candle there popping up with a bit of a wick at the top, but looking pretty good on the breakout, and not a surprise to see a 55 plus scooter moving change. And Electronic Arts is also in here. You can see another gap up, and not a surprise to see a 29-point gain on the scooter for Electronic Arts. And with that, I'm going to conclude our market update. And actually, I'm going to pass it back to you, Tom, to look at some momentum sleepers.
Yeah, I got a couple here that we haven't done a momentum sleeper in a while, but essentially what we're trying to do with momentum sleepers, and we all have, I guess, our own definitions for what they are. But for me, it's where you're trying to find some stocks maybe that from a technical perspective have been sleeping a little bit. Could be just groups, industry groups or stocks that are consolidating or maybe just beginning to regain some earlier strength. And so a couple of stocks here. Let me go ahead and share my screen first. Is a retail stock, Gap, GPS. This is a stock that clearly has been uptrending here over the past 6 months or so. But after getting to a top in late December, you can see, of course, this was during the holidays, but the volume really came out of the stock. It kept moving higher. You can see the PPO rolled over. So it's just telling you that the price momentum was slowing a little bit. We did pull back here for about a week, week and a half, went down below the two key moving averages that I follow, the 20-day and the 50-day. And then after rallying back and briefly breaking out, you can see that we're kind of struggling again here, going sideways. I think all of this actually is pretty healthy. You can see that the RSI at this point is at 49. So while the overall market's been so overbought for a long time and many of the key sectors and some of the industry groups have been very overbought, I do think that this is a stock that has been just more or less sideways consolidating for the last couple of weeks. So for me, it's a sleeper. I think it's going to eventually break to the upside. I love this volume coming in with its last earnings report. I think that was about the third week of November. So we have about a month or maybe a little less to the next earnings report on Gap. And I would not be surprised to see a move starting fairly soon and going up into its next earnings report. So I think GPS is one that looks kind of interesting. If I pull back, look at a longer term chart, you can see that with the move up in September and October, we pulled back, we tested that rising 20-week moving average and bounced right off of it. So I think that the longer term downtrend has reversed, and I've talked about this a lot about the retailers. And the other thing to keep in mind here is that retail stocks tend to do extremely well February through April. Using that seasonality chart, we can pull this one up and I'll quickly take a look at GPS for you. But here, if we go back over the last 20 years, you can see that the two most solid months in terms of rising, the odds of GPS rising, 74% of the time it rises in February and March. And look at those average monthly returns. February 3.5%, March 4%. And of course, today is January 31st. So we are heading into two of the strongest months for Gap as well. So I think all of that leads me to think that this could be a sleeper as we head into February. The only other stock that I had that I wanted to mention was UPS. And UPS is in the delivery services area, which has been very strong. Had a great start in January, very heavy volume, broke out above prior highs. And you can see over the last couple of weeks, it's just slowly been drifting. It was extremely overbought on the RSI. Again, here's another one that has dropped down into the 40s. We don't see a lot of strong stocks recently anyway. We haven't seen a lot of strong stocks moving back down with RSIs into the 40s, but I think this is one that looks kind of interesting. And again, if we pull up that weekly chart, you can see that after going mostly sideways in 2017, a little bit of an uptrend, but mostly sideways, we have made a very strong start to 2018. I think the pullback is setting up an opportunity for UPS. I look for higher prices here. Those were the only two I had. I don't know, Erin, if you're muted.
I was looking diligently for some momentum sleepers before the show, and honestly, I just didn't find anything overly interesting to share. And of course, we were preparing for the interview today, but I'm going to share my screen. Let's see if I can. Yeah, let's go here and go here. Okay, I'm trying to remember where I put them. Honestly, I think I've got them right in here. And I made a chart list here. Sorry for this.
No problem.
Yeah, that's my Monday setup. So I think I popped it in my scan. Yeah, my scan one. Yeah, I was running all kinds of scans to try and find some interesting ones. And as you can see, I found two. And I'm not actually overly excited about either of them, to be perfectly honest. But this, I think, fits the bill as far as what we're talking about. And I'm going to just take this into annotate real quickly so I can give you a little bit more information. Somebody did ask me how to make my the support and resistance lines translucent, because as you can see right now, it is not. basically make sure you have a color on your color wheel or your selections that is translucent. And it doesn't matter which one, as long as you pick a translucent one, it's going to make your support resistance line translucent. And then I make it really big. That's just my personal preference. I think some of you have been able to see. So I'm looking at this area. This kind of lines up. Let's see. Well, obviously along these tops. So what I don't like is the chart pattern, because it is a descending triangle, and generally you're not going to see something good come out of that. However, we're seeing a little bit of a breakout today, and we can see that the PMO has started to turn over. I also like the fact that even though price was really moving down quite a bit, the PMO really didn't lose that much. It didn't lose that much here. When I look at the bottoms here, and well, wait, no, so if you look at this internal trend line, you know, you've got prices trending lower, but we could see the PMO really wasn't, it didn't have that much of a problem with it. And it's now turning back up. We could be getting, I'm sure we're getting a bit of whipsaw here, but I like the fact it bounced off of that support area, and it has actually broken out today, although it's back under that declining tops trend line. But I think this one might be, I would consider a sleeper, just because we are starting to see that momentum shift, and we are getting a little bit of a breakout here. And I will save that. And then the other one, I think, and again, I worked hard on these, and this one I think has a lot more potential. And as you can see, there's pretty good reason why. There we go. So translucent color. Thick line. There we go. Nice breakout. Now, of course, currently we haven't closed above that intraday high or above this area of overhead resistance, but we have penetrated it, and I think that's a positive. The PMO bottoms rising with the PMO with the price bottoms here. I think that's positive. So I like the fact that momentum does seem to be picking up slightly here, and obviously with today's sharp upward move here of 4.5%, we did see the PMO just get yanked right back up toward its signal line. But I think that's fine, because it did end up helping us get a bottom that is higher than the previous bottom. OBV, the
bottom's not too healthy on that.
Yes, I knew that was going to be your point. We are seeing the OBV though in a negative divergence, really, if you count this trade today. You know, well, we were seeing that price go down, and so, you know, we got the volume kind of came out of it. Let's see here. So yeah, there, like I said, these charts that I selected, I wasn't so sure about. If you look at a weekly chart on this one, though, I want to show you that real quick. And I'll just move it here, and then we'll have to close this down. But if you look at the weekly chart, you can make out a reverse head and shoulders here. And that is the neckline that we're penetrating right now. So I think, and look at the healthiness of the PMO on the weekly chart. So as far as an intermediate term trade, I think this one could be decent. And I know, Tom, we're always talking about with the yields rising, and the financials tend to do better. And we are looking at a financial here. So that would be mine, those two.
Yeah, I think too that, you know, that Hope, I think, you know, got a pretty nice uptrend in play, and off of that recent high, it looks to me like a little bit of an inverse head and shoulder pattern trying to make the breakout. But yeah, there's definitely some warning signs. I know there was a question in the chat room about why use the OBV instead of the accumulation distribution line, but you know, they really just do calculations different ways, but they're kind of looking at the same type of thing. I looked at the accumulation distribution line on Hope, and it wasn't very good either. I mean, it kind of followed suit with the on-balance volume kind of rolling over. So that might be one concern, in that right now we're getting a false breakout with OBV and the AD line both, you know, being somewhat negative. Right.
And I have to say, though, as far as using the OBV over the accumulation distribution, it's a matter of, I know the OBV, as I tell everybody, I've been calculating the OBV since I was, what, Dad, 10 years old, 12?
Well, I mean, yeah, 12 or 14.
Yes. So I was actually getting in there with the calculator. So I just have, it's just a natural knowledge for me. It just, I can see it and understand it in a natural way, because I grew up with it, and for real.
Well, we do have the summary there of the momentum sleepers. You can see GPS and UPS, CMRX, and HOPE, HOPE. So those were four that we kind of pulled up for today's momentum sleeper segment. It is time to wrap up. I do want to thank Carl Swenlin for joining us today. It was certainly a pleasure having you on here today, Carl, especially given that it's your daughter's birthday.
Yeah,
Great surprise, and you're going to have to come back to join us again soon.
that'd be nice.
Yeah, and it can't wait for the next birthday.
No, it cannot. We're not waiting until next January 31st. Well, there you have this on your screen, the weekly schedule coming up. So we've got Bruce Frazier tomorrow, and then of course Erin is doing a workshop on Friday, sifting scans. So you'll be able to, if your interest lies in scanning and how you can work your way through scans, that'll be a great segment and a workshop on Friday. With that, I think we need to wrap up. I do want to again wish my co-host Erin a very happy birthday. It was a fun day.
Yes, I very much enjoyed it. It was great to have my dad on.
Happy birthday, Erin.
Oh, thank you.
There you go.
I expect the phone call with you two singing later today.
Who, Carl and me?
No, actually, my mom and dad. It's like
okay.
one of those silly things we call each other and sing happy birthday.
Okay. I thought you wanted me to call and sing you happy birthday. I was like, okay, that's what you
No,
want.
honestly, Tom, I really don't.
Trust me, you don't want me to.
That's what I was thinking.
Anyway, we better wrap up here. I want to thank everybody for joining us today. It was a great show with Carl and the birthday girl. Please remember to complete your survey as you exit the lower right-hand part of your screen. How'd we do? You can just click on that. It's a very brief survey. We'd love to hear what you think of Market Watchers Live. As a reminder, Market Watchers Live airs 5 days a week, Mondays through Fridays from noon to 1:30 p.m. Eastern Standard Time. Have a great Wednesday afternoon, everybody. We'll see you back here on Thursday. Happy trading.